Yes, so very good evening to all of you. Right. So, did you find it more interesting to revise and study the subject of audit yesterday after we've done the class? Right. Did you have a look at whatever we discussed or whatever we talked about, and did it give you a boost for your preparations for the exam? Okay. Right. So, let's have some discussions even for today. Right. Beginning with, let's start with an essay over there. And then after the standards, we come to the mock test paper and so starting with essay 550, right? What is 550 regarding? It is regarding the related parties, right? So again, an important auditing standard wherein lot of questions come in the exam, or many a times a question comes in the exam. Rather, question comes, only one question come. But there is a higher chance of a question coming from this particular standard, which is essay 550, which is for the related parties, right? So we have the accounting standard also. We have the AS 18. We have the Ind AS also, the Ind AS 24, right? Then we also have the clause 13 of the CARO, which is regarding the related parties, whether the transactions with the related parties are they in compliance with section 177 and 188, and whether the disclosures have been made in accordance with the applicable accounting standards. Okay, right. So now over here we talk about the SA 550 related parties, right? These are the corresponding references which you can also give for related parties. Okay, so now related parties, whose responsibility? Right, related parties to identify, to give the disclosures as per the accounting standards. It is all the responsibility of the management. Like yesterday we did one question regarding the components. So we asked company how many components. So they said we have 200 subsidiaries, but I can't blindly rely on what they say, right? I need to cross check. Really, do you have 200 subsidiaries? So now similarly over here we are talking about the related parties, right? So I ask management how many related parties. So they tell me that we have 400 related parties. Now what I need to do, I as an auditor need to perform the audit procedures to check the related parties, right? So what are the audit procedures to identify the related parties, and which are the audit procedures which will help the auditor to identify the existence of related parties? It says for that auditor you need to maintain the alertness while reviewing the records or documents. Auditor, when you review the records and documents throughout your audit, you need to maintain the alertness, right? So now which records or documents can give information to the auditor regarding the existence of related party, relationship or transaction? Which record, which document can tell auditor, maybe this is a related party, right? Which record or document can give information to the auditor that it could be maybe a related party transaction over there, right? Which record document? Yes, one, the shareholders register, because from that you come to know the shareholders who are having the majority shareholding in the company. Then the investment register, whatever investments have been made by the company during the year, right? And so from that you come to know the subsidiary, associate, joint ventures and so, right? Then after that the life insurance policies taken. So life insurance policies, from that you come to know the key managerial personnel, right? You come to know that they've taken a key insurance policy for these, life insurance policy for these people. So probably they are the key man insurance, the key personnel type. Okay, right. Then after that, you also come to know about it from the income tax return, because income tax section 40A to B, payments to specified person. That those specified persons are nothing but the related parties over there. Right. Then the statutory records of the company, right? The section 189 register, wherein it's the register of the contracts of all the transactions which you've entered into with the related party, right? Very important, the minutes of the meeting, because the audit committee approval, shareholder approval, board meeting approval will be required for entering into transactions with the related party, right? So the minutes of the meeting. Right. Then you can also obtain the confirmation from the bank, from the legal third parties and so, right? So even debtors, they can give you information whether it is a related party. Right. Then after that, what does it say? The contracts and agreements which have been renegotiated during the period. So you are wondering why this contract got renegotiated during the period? Why so much of greatness of the heart? And then you come to know, it was a contract which was with the related party, or contracts or agreements which have been entered into with the management TCWG. So they are purchasing goods from the management, from the TCWG of the entity. Right, so contracts with the management TCWG, right? Then contracts whose terms have been changed just before the expiry of the contract, Right? Then after that, the internal auditor's report, because you come to know, okay, oh, there is weakness in the internal controls. The controls in the organization are not being followed. So why they are not being followed? Oh, again, because it's a transaction with a related party. And because it is a transaction with a related party. Then the papers filed with the regulator, right? The securities regulator, right? The documents filed like the prospectus and so, even that can give you information regarding the related party. Even that can give you the information, the prospectus filed, rest the papers filed with the regulators, even that can give you the information regarding the existence of the related parties. Okay, right? So what is this question that I have discussed with you over here? Okay, what are the audit procedures to identify the related parties? So what does the standard say? That auditor, whenever you are reviewing the following records and documents, you will maintain the alertness to check whether there are any related parties. Okay. Right. Then after that, you're checking the related party transactions and you come to know that some related party transactions, they are prima facie biased. They are prima facie biased. That means this related party transactions are outside the normal course of the business. See, generally a transaction is in the normal course of the business, but these transactions are outside the normal course of business. Like, if I tell you Tata Motors, what is the first thing which comes to your mind? Okay, what would Tata Motors be selling? Like you say, that ma'am, Tata Motors, so they sell the different types of vehicles, they are automobile industry, manufacturing industry over there. But if I tell you, Tata Motors, you also get a talcum powder of Tata Motors. You'll say, ma'am, what? How is that possible? Why would they sell talcum powder? And that too from a partnership firm where one of the director is a partner in that partnership firm. Now your mind says, oh my God, this seems to be a related party transaction and it is not in the normal course of the business. It is outside the normal course of business. It is prima facie biased. So as an auditor, when you come to know about these related party transactions which are prima facie biased, what you will do? You will ask management, who authorized? Who approved for you to entering into this transaction with the related party, that too outside the normal course of the business. Second, what is the business rationale? What business sense does it make for you to start selling the talcum powder? Who gave you this wonderful idea over there? Yes, what is the business rationale behind entering into such a transaction? Story the management is cooking, that is the reason we are selling talcum powder or something like that. Auditor says nothing doing. Is it consistent with the management's explanation? So whatever they are saying and what is the reality? Is it substance over form? Are they transferring the profits of the company from one company to another company or so? So is it consistent with the management's explanation? And last one, whether it has been disclosed, whether it has been accounted for in accordance with the AFRF. Because AFRF, applicable financial reporting framework, what will it most probably say? Okay, this is an exceptional item. This is a non-recurring item. This is an extraordinary item. So this you disclose it separately. Right? So you need to check whether it has been separately disclosed in accordance with the AFRF. Okay, right. So SA 550, which is regarding the related parties, right? So related parties, one question we discussed, okay, what are the audit procedures to identify the existence of the related parties? And second one, related party transactions, which are ONCB. What is ONCB? Outside the normal course of the business. That is related party transactions, which are prima facie biased. Okay, right. Then let us come to 3 standards in the 600 series. SA 600 using the work of another auditor, then SA 610 using the work of the internal auditors, and then SA 620 which is regarding the using the work of an auditor's expert. Is it right? Yes, using the work of another auditor. Who is this another auditor over here? He is the branch auditor, right? Then using the work of the internal auditor, right? Using the work of the internal auditor, and then you have using the work of the auditor's expert. Are you all with me? Right? Using the work of the auditor's expert. Which section of company law talks about branch audit? Okay, branch in India can be audited by whom and branch outside India can be audited by whom? Right? Section 140 43 subsection 8 of the Companies Act, which is regarding the branch audit. Which section in company law talks about the internal audit? Section 138, okay, which companies are required to appoint an internal auditor, and then who may be appointed as an internal auditor. And a chartered accountant or a cost accountant, whether engaged in practice or not, or any other professional as may be decided by the board, he may or he may not be an employee of the company. Right, and which companies are required to appoint an internal auditor? I told you, whenever a list of applicability is prepared, first one to go and stand in the list is the listed companies. Then apart from the listed companies, you have the unlisted public companies. Unlisted public companies having the deposits of more than or equal to 25 crore at any point of time during the preceding financial year, or having the paid up share capital of more than or equal to 50 crore as at the end of the preceding financial year, or having the borrowings of more than 100 crore at any point of time during the preceding financial year, or having the turnover of more than or equal to 200 crore is during the preceding financial year, right? And for a private company, any one of the two conditions, either borrowing is more than 100 crore or the turnover is more than or equal to 200 crore, then these companies, they have to appoint an internal auditor. And these are the classes of companies which, as per section 138 of the Companies Act, are required to appoint an internal auditor. And for internal audit, we also have a reference under the clause 14 of the CARO 2020, which is regarding the internal audit. And if the expert is appointed by the auditor, then he is called as the auditor's expert. If the expert is appointed by the management, then he is referred to as the management's expert. And as such, management's expert is discussed in SA 500. Okay, can auditor use the work of the management's expert, auditor's expert? Yes, he can use work of any of the expert, but whosoever's work he used, sole responsibility for the audit opinion expressed. And a sole responsibility for the audit opinion expressed. It does not diminish just because I've used the work of the branch auditor, or because I've used the work of the internal auditor, or I've used the work of the management's expert or auditor's expert. It does not reduce the responsibility of the statutory auditor. Right? It does not reduce the responsibility. Yes. So few of the branches of the company are being audited by branch auditor. So now can I use and the branch auditors, they've submitted their report to the company auditor, principal auditor. So can now the principal auditor use the work of the other auditor? Can he use the reports given by the branch auditors? Yes. But can he blindly rely? No. So he needs to do the evaluation. So how do you do the evaluation? One, you consider the competence of the other auditor if he is not a chartered accountant. Like branch outside India, it could be audited by a person who can act as an accountant as per the laws of that foreign country. Right? So in that case, you check the competence. If he is a chartered accountant, then competence is assumed. Then after that, it says you coordinate with the other auditor while planning the work. You coordinate with the other auditor. Tell other auditor, these are the areas you need to check. These are the areas where there is a significant risk, where there is a risk of material misstatement. Right? So you coordinate with the other auditor. Then you not only that the principal auditor communicates with the branch auditor, the branch auditor will also communicate his findings to the principal auditor. So what does it say? Consider the significant findings of the other auditor. So he says at branch level, I have identified a fraud. So you need to check whether at company level this fraud, is it material or no. Right? So what does it? Consider the significant findings of the other auditor. Now, then what does it say? Principal auditor, you need to advise the other auditor as to the auditing, accounting, and the reporting requirements. You have to tell him, okay, these are the accounting standards you need to check compliance. These are the auditing standards you need to follow. These are the clauses of CARO for which you need to do the checking. Right? Advise the other auditor. Many times the principal auditor sends something called as a questionnaire or a checklist to all the branch auditors. Right? And branch auditors have to follow that checklist or fill up the questionnaire. Right? So what does it say? Advise the other auditor as to the significant accounting, auditing, and the reporting requirements. Then what does it say? Discuss with the other auditor if need be. So go for a meeting. Yes, go and meet the branch auditor. Right? Then visit the branch. Yes, visit the branch auditor. You think you want to have a meeting with the branch auditor, so even you can do that. Right? So what is this? This is evaluation of the work of the branch auditor, right? This is the evaluation of the work of the branch auditor. Is it clear to all of you? Right? So competence, coordinate, consider, then advise, discuss, and visit. Can the principal auditor access the working papers of the branch auditor? Can the principal auditor access the working papers of the another auditor, the component auditor, the branch auditor? Can he access the working papers? No. Yes, he cannot access the working papers, but can he access the books of account of the company maintained at the branch? Yes, he can access the books of account of the company maintained at the branch, but he cannot access the working papers of the branch auditor. They are the branch auditor's property. Okay, right. Then after that, coming to SA 610, right? What is a very trending discussion in SA 610? Kitna पूछते exam में? How much of it they are asking in the exam? Yes, all of you listening to me. Happy to see the names again. Now they are coming up slowly. When you know the time is 7:30, how could you be late? You say, ma'am, हो जाता है. ठीक है, होता है तो ठीक है. Let it happen. No problem. Yes. So anyways, all of you there, sitting straight, upright, right? All vigilant and cautious and, skeptical regarding your studies over there. Very much concerned. Better be concerned right now. Otherwise, the results will be concerning. Okay. And branch auditor disregard the advice of the principal auditor if he deems so as per judgment. Yeah, so in case if you decide not to use the work of the branch auditor is not listening to your instructions, so you'll say, I'm not able to obtain the sufficient appropriate evidence regarding the branch. Okay, right. So anyways, now let's proceed further where I'm talking about, okay, now in SA 610, there is a trending concept over there wherein it says that external auditor, yes, you can take, or statutory auditor, you can take something called as the direct assistance from the internal auditors. You can take the direct assistance. So external auditor, he can tell the statutory auditor to do some work on his behalf. You understand? So then external auditor says, okay, internal auditor, come here. I can take direct assistance from you. I can tell you to do some work on my behalf. So what you do, you identify and assess all the RMM. Right? You identify and assess all the RMM. You check for the sufficiency of the test. You check for the appropriateness of the going concern. You check for the you evaluate the accounting estimates. You also check whether the disclosures have been given as per the AFRF. That internal auditor will say, come, I will do the audit only for you. वो भी क्यों कर रहे हो तुम? वो भी मैं ही कर देता हूँ. And also for these areas, can the external auditor take the direct assistance from the internal auditor? No, 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 no. For these areas, no taking the direct assistance. What are these areas? These are the areas which involve the significant judgment, and wherever significant judgment is involved, you cannot take the direct assistance from the internal auditors. Okay, so for which all areas I cannot take the direct assistance? It says no taking the direct assistance. When no direct assistance to be taken where there is the significant judgment involved. And have we discussed the examples of the significant judgment? Yes, wherever there is significant judgment, no taking the direct assistance from the internal auditors. Then areas assessed to be having the higher risk of material misstatement or more than limited judgment. Again, what does it say? No taking the direct assistance. Those areas you have to do the checking on your own. No telling an internal auditor on my behalf, would you check if there is any fraud in the company? No, that you have to check it on your own only. You understand that? Okay, right? So areas of higher assessed RMM or where there is more than limited judgment which is involved. Then this, what you say, work which the internal auditors have already done and about which they are reporting, have reported, or they are going to report to the management. So while doing their work, on the way when you tell them to do some work on your behalf also, they will do it. They've already finished their work. They're going to give their report to the management. Now they will not go back and do some work specially for you. Right? So work which has already been done, then for that matters, you cannot take the direct assistance. And then what does it say? The decision which the external auditor has taken in accordance with this essay. Okay? External auditor himself has decided that I will not use any direct assistance from internal auditor. So then don't take direct assistance. And you've taken a decision not to take the direct assistance, so then don't take the direct assistance. Are you understanding that? So no direct assistance. Okay. Now, if you decide, okay, I want to take the direct assistance, so how to determine? How to determine whether to take the direct assistance? And also determining how to whether to take the direct assistance or no. Yes, one, it depends upon. Now, I will tell you, I'm here to tell you what are the points in determining whether to take direct assistance. All these questions are star mark question. But when I say this point, how many of you, your mind, the files are opening in your mind? You say, ma'am, there's no file in my mind, so you don't worry about me. Right? No, no. But those of you who are having so many files, kept in the different neurons of your brain, is some file, is some word, is some content coming out over there regarding the determining whether to take the direct assistance from the internal auditor? यस, क्या करें? डायरेक्ट असिस्टेंस लेना है कि नहीं? जिनको हिंदी में सुनना पसंद है ना, वो भी यहीं पे बैठे रहो, है ना? कीप ऑन, कंटिन्यू टू लिसन टू द क्लास, क्योंकि पेपर तो इंग्लिश में ही लिखना है ना, पेपर तो यू हैव टू राइट इन इंग्लिश ओनली. Okay, right. So determining the direct assistance. How to determine? One, it depends upon the amount of the judgment involved. Why? Because if there is significant judgment, if there is more than limited judgment, then we will not take the direct assistance. Correct. Second, it depends upon the RMM. Why? Because if there is an RMM, again, we will not take the direct assistance. And then it also depends upon the objectivity and the competence of the internal auditors. Yes, so you say these internal auditors, they are not having a good organization status, right? They are not having a, what you say, a say in the organization. TCWG is not involved in their employment. Yes, an appointment of the internal auditor, you say, no, I don't want to use the work of these internal auditor for taking direct assistance. And also you look into the competence of the internal auditors, okay, whether they will be able to do the work or no, right? Whenever the external auditor, he takes the direct assistance from the internal auditor, he needs to document, okay, how he evaluated the objectivity and the competence of the internal auditor. Then also the working papers of the internal auditor for that area. Then also the agreement with the internal auditor and agreement with the entity that they are going to allow you to take the direct assistance from the internal auditor. Right? So internal auditor also agrees to do some work on your behalf. You have an agreement with him. Entity also says, tell our internal auditor, he will do some work on your behalf. Are you understanding that? Right? So that is regarding the direct assistance in SA 610. So one very important discussion in SA 610 is regarding the direct assistance from the internal auditors. And then after that, generally, how do you do the evaluation of the internal audit function? You look into the objectivity, that is the organizational status of the internal auditor. Then the competence, whether they are the members of the relevant professional bodies, right? Also whether they are having the technical training and proficiency as internal auditors. Do they have the knowledge of the AFRF, or just pick up anybody walking on the street and say, hey, you fellow, come here, come and do our internal audit? No, like that you cannot pick up anybody. You have to check the competence of the internal auditors. And last but not the least, you also need to check the approach which is being followed by the internal auditor for doing their work. Okay, whether they prepare an internal audit program, do they have a checklist, do they do the risk assessment, do they keep the proper documentation of the work done, do they have quality control policies and procedures, right? So that is SA 610, using the work of the internal auditors. And then you have using the work of an auditor's expert. Can the auditor use the work of an auditor's expert? Yes, lawyer, actuary, engineer also. Can the auditor use the work of the expert? Yes, but again, what you need to do? You need to do the evaluation, right? So one, what you will check? You will check the competence, right, of that expert. That means you will check the degrees, whether they are the members of the relevant professional bodies. Then you will check the capabilities, okay, whether they are able to put their competence into action. And you will also check the objectivity of the auditor's expert. Right, so you look into the competence, capability, and the objectivity of the auditor's expert. Then once you see कि lawyer seems to be a good lawyer, but now I have evaluated the lawyer, now I have to evaluate the work done by that lawyer. Are you understanding? One, you evaluate the expert. So how do I evaluate the expert? I look into the competence, capability, and the objectivity. And then after that, I evaluate the work which has been done by that expert. How to do the evaluation of the work done by the expert? You check whether the findings and conclusions, are they consistent with the other audit evidence? Whether the findings and conclusions of the expert, are they consistent with the other audit evidence? That means, are you able to corroborate? Then are you able to cross check it with the other audit evidence which you've obtained? Then the assumptions and methods. Though you don't know how to do that work, that is why you're taking the help of an expert, but at least you can understand what assumptions have been made by that expert. Are those assumptions reasonable? Whatever method is being used by that expert, whether that method is as per the AFRF, that actually he's done the calculation of retirement benefit, whether he's made the correct assumption, whether he's used the correct method. So assumptions and methods, and the relevance, accuracy, and completeness of the source data being used by the expert, right? So whatever source data, like for calculation of retirement benefits, the salary register would be the source data, right? So that source data, whether it is relevant, accurate, and complete, right? So the relevance, accuracy, and completeness of the source data. Okay, right. So this is just in a nutshell for us to revise the 600 series, SA 600, 610, and 620, right? Using the work of another auditor, using the work of the internal auditor, and then using the work of the auditor's expert, right? What if you find that the work of the expert is not good, his findings and conclusions are not consistent, or his assumptions and methods are not correct, or the source data he's taken is not correct? Then what you do? You find work of expert not good. Then what you do? You tell the expert to do the further work. You tell him to do the work again, or auditor, you do the further work. And say even after doing the further work, you're not able to get the evidence. You're unable to obtain sufficient appropriate audit evidence. That means it's a limitation on scope. And what do you do due to a limitation on scope? You issue a qualified opinion or a disclaimer of the opinion, right? You issue a qualified opinion or a disclaimer of the opinion, right? So all of you there? Yes, let's come to a few question and answers. Like yesterday also we discussed all the questions in the RTP May 23, right? Today let's look into the MTP May 23 series 1 and series 2. So quite a lot of work for us, and in between we come to a lot of other discussions and chapters also. Yes, all of you there? All of you there? Okay, great. Prakash and Company Chartered Accountants were appointed as the statutory auditors of GIN Limited for 21-22. During the course of audit, one of the partners, CA Prakash, observed that there is a misappropriation of the asset in the form of the theft of the entity's inventory and is perpetrated by employees in relatively small and immaterial amount. CA Prakash is concerned with the existence of certain circumstances for increasing the susceptibility of assets to misappropriation. Okay, how come, why the assets of the company are getting misappropriated? Guide CA Prakash with respect to the risk factors related to misstatements arising from the misappropriation of assets with reference to the relevant standard on auditing. Right, so they are asking you the fraud risk factors, factors due to which there is a possibility that there could be a misappropriation of the asset. Right, factors due to which there is a possibility that, or what is the reason, okay, why there are higher chances of the asset getting misappropriated, right? So these factors are divided under the three parts. What are the three parts they are divided under? Incentives and pressures, opportunities, and the attitudes and rationalization, right? So incentives and pressures, then the opportunities, and then you have the attitudes and rationalization. So why do you think there is a higher chance that the cash of the company is steaming and lading, embezzling the receipts of the company, they are stealing the inventory of the company, they're using the assets of the company for personal use, right? So why they are doing so? Because they know so very soon they are going to be, removed from the company. And so known or anticipated future employee layoffs, right? Or recent changes to employee compensation or benefit plans, that you expected a promotion but you did not get the promotion, inconsistent with the expectation. Or anticipated changes, very soon you know that they are going to cut down your salary or so. Right? So there is an incentive, or there is a pressure, or there is a grudge against the company because of which you argue, yes, the employee might do the misappropriation of the asset. Okay, that is the incentives and pressure. Then, most important, you are misappropriating. Say this is the cash box of the company, and employees are taking away 5,000, 10,000, 20,000 cash from this cash box. How is that possible? That is possible because there is an opportunity. And from where does the opportunity come? The opportunity comes from the weak internal control, the inadequate internal control. Right, the inadequate internal control. So large amount of cash, they have 2 to 3 crore cash with them, right? So obviously higher chance of the asset getting misappropriated. Inventory which is small in size, like say diamonds, but high value, high demand. Right? So again, that is the higher chances of the opportunity to misappropriate the asset. Easily convertible assets and fixed assets which are small in size. Okay, right. So what are these? These are the opportunities, and in opportunities, what we have over there also the inadequate internal control. That is inadequate segregation of duty, inadequate oversight over management expenditure, inadequate oversight of employees responsible for assets, then inadequate job applicant screening of employees with access to assets, inadequate record keeping, inadequate system of authorization. Right? So all inadequate controls, that is weak internal controls over there. Right? All the points that they are talking about is the weak internal control. And last one, what you have is the attitude or rationalization. In sometimes it is in I should not say it this way, but it's in the blood only. What is like not coming to the blood? I think that's not the correct way. It is just in the nature of that person. It's default mode activated in that person. Okay, oh, there are controls. Oh, that means we don't follow controls. They find a pride in not following the controls in the organization. They have the disregard for the monitoring or reducing the risk relating to misappropriation. There is disregard for the internal control. They're unhappy with the organization, displeasure or dissatisfaction with the entity, changes in behavior or lifestyle. You see this attitude of this employee, 20,000 salary, but attitude of 20 crore. And so you say, how come so much of attitude has come? So attitude has come with, what does it say? As the misappropriation of assets and getting so much of the funds of the company, or the tolerance of the petty theft. Did a 2 rupee fraud, 10 rupee fraud, 200 rupee fraud, nobody said anything, so confidence kept on increasing to do higher amounts of the fraud. Okay, right. So that's the attitudes and rationalization. What are those? Those are the attitudes and the rationalization. Okay, so those are fraud risk factors for misappropriation of asset. Then in course of audit of Fin Limited, you observe that processing of accounting data was given to a third party on account of certain consideration like cost reduction, own computer working to full capacity. Fin Limited uses a service organization. Oh my God, they are using a service organization. So we'll have to go to SA 402, right? The audit considerations relating to an entity using a service organization to record transactions and process related data. As an auditor, what would be your considerations regarding the nature and extent of the activities undertaken by the service organization to determine whether those activities are relevant to the audit, and if so, to assess their effect on the audit risk? Discuss with reference to the relevant standard on auditing, right? So basically they are talking about SA 402, understanding the nature of the services provided by the service organization, right? You have to obtain an understanding of the nature of the services provided by the service organization. So what do you need to understand? Okay, whatever services are being provided by the service organization, what is the significance of those services? Like, they've outsourced their salary processing. Oh, then that's a big task that they have outsourced. So the significance of these services, then the materiality of the transactions which are being processed by the service organization, how much of it is having an impact on your accounting? Then how much is the interaction between the user entity and the service organization, the degree of interaction between the service organization and the user entity? And the last one, the relationship between the user entity and the service organization. What is the relationship? So you come to know, oh, this service organization, it is their subsidiary company only. So if it is their subsidiary company, then to gone, there is a possibility of bias in that case. There may not be objectivity. Right? So what does it say? Understanding of the nature of the services provided by the service organization, the significance of the services, the materiality of the transaction, the degree of interaction, and the nature of the relationship between the user entity and the service organization. Okay. Next one. C.A. Subhadra is the statutory auditor of Sati Limited for 21-22. In respect of loans and advances of 95 lakh given to Shripal Private Limited, the company has not furnished any agreement to C.A. Subhadra, and in absence of the same, he is unable to verify the terms of repayment, chargeability of interest, and other terms. Justify the type of opinion which C.A. Subhadra should give in such a situation. Also draft an appropriate opinion paragraph and the basis for opinion paragraph. Right? So did not give the agreement. That means what? Unable to obtain. What are you unable to obtain? You are unable to obtain the sufficient appropriate audit evidence. You are unable to obtain the sufficient appropriate audit evidence. They have not furnished the agreement. You are unable to verify the terms of the repayment. So now what does it say? In this case, auditor, either you can issue a qualified opinion or you can issue a disclaimer of the opinion because you are unable to obtain the evidence. Right? So what does it say? It is material but not pervasive. So as to give a disclaimer. So it is not that important, that big an amount for the auditor to give a disclaimer. Right? So that is why only giving a qualified opinion. So now what is the drafting of the qualified opinion paragraph? Yes, one opinion paragraph heading changing to qualified opinion, and then what do you write? In our opinion. Right? This drafting comes in the exam, so please ensure that you know these drafting skills. Right? So in our opinion and to the best of our information and according to the explanation given to us, except for the possible effect, maybe it should have been possible effect of the matters described in the basis for qualified opinion section of our report, the financial statements of Sati Limited give a true and fair view in conformity with the accounting principles of the state of affairs as at 31st March, profit and loss for the year ended on that date. And then basis for qualified opinion paragraph. What is the first thing which you write in the basis for modified opinion paragraph? Basis for qualified opinion paragraph, the matter which gave rise to the modification. Okay, why are you modifying your opinion? Why are you giving a qualified opinion? Why are you not giving a clean report? The matter which gave rise to the modification. So the company is unable to furnish the loan agreement with respect to the loans and advances of 95 lakh. Consequently, in the absence of such an agreement, we are unable to verify the terms of repayment, chargeability of interest, and the other terms. Okay, right. So that's a drafting question. You should be knowing the writing of the answers for this particular category of questions also. Then it was observed from the modified report of the financial statements of Shravasti Limited for 21 that depreciation of 3.95 crore has been charged off to the statement of profit and loss instead of including it in the carrying value of the asset under the construction. State in relation to the audit for 2022 whether such modification in the previous year audit report would have any implication for the current year, and if yes, how the auditor is required to deal with the same in his audit report for the current year. Which auditing standard? Yes, which standard is the question about? Essay 7. Yes, essay 710, which is regarding the comparative information, and we need to talk about the reporting. Okay, how comparative information may affect my audit report for the current year. Right? So in the corresponding figure, that is in the last year figures of 2021, there is a misstatement. Right? There is a misstatement, and they say depreciation of some 3.95 crore. Right? So last year 2021 there is a misstatement. Was it reported last year? Yes, it has been reported last year. But now what I need to check, I'm doing audit of this year. Now this year what I need to check, that whatever was the misstatement which auditor had reported last year, whether that matter has been resolved or the matter is not resolved. Right? Whether that matter has been resolved or the matter is not resolved. Generally, the case study comes on this point. Right? So, if the matter is resolved, then what does it say? No reporting required. Finish. Matter is over. You understand? No reporting required. However, right? There was a misstatement last year. Was it reported last year? Yes. Has the matter been reported? Yes. Has it been reported? Yes. Has it been resolved? No. So now what you'll have to do, modify your current opinion, modify the current report, right? So you'll have to carry forward the misstatement in the current period. So these are uncorrected misstatements related to your prior periods, right? These are the uncorrected misstatements related to your prior periods. Okay. Right. So let us look at the answer over here. Right. So auditor's responsibility, right, is given in SA 710, where the earlier your opinion is qualified. SA 710, when the auditor's report on the prior period as previously issued includes a qualified disclaimer or an adverse opinion, and the matter which gave rise to the modification is resolved. That is the matter reported? Yes. Has the matter been resolved? Yes. Then what does it say? The auditor's opinion on the current period need not refer to the previous year modification. Need not refer to the previous year modification. However, SA 710 provides that if the auditor's report on the prior period as previously issued includes a qualified opinion, that means was the matter reported? Yes, and the matter which gave rise to the modification is unresolved. So that means the matter is not resolved. The auditor shall modify the opinion on the current period financial statements. And in the basis for modification opinion paragraph, the auditor will refer to both the current period figures and the corresponding figures and explain that the audit opinion has been modified because of the effect of the unresolved matter on the comparability of the current period figures. Right? In the given case, what does it say? The auditor will have to modify his report for both current year and the previous year figures. If, however, figures and provisions are corrected, then the auditor need not consider to the earlier year modification. Right? Clear to all of you? Getting an understanding? Okay. SA average weightage in MCQ also anyone reply? Okay, so you're asking anyone, you're not asking me, so no problem. है ना, तो मैंने नहीं reply करना है. Okay, right. So anyways, yes, let's get further into the discussion over there. All of you there. So role of the auditor, coming to the next question, wherein they are talking about the auditor of the holding company and the auditor of the subsidiary company. Sita Limited is the subsidiary company of Geeta Limited, right? Ram and Associates has been appointed as the auditor of Geeta Limited for 1920, and Hanuman and Associates have been appointed as the auditor of the Sita Limited. So Sita is the subsidiary, and what does it say? Geeta Limited is the holding company. Ram has been appointed to do the audit of the Geeta, and CS Hanuman and Associates have been appointed to do the audit of the Sita. Explain the role of Ram and Associates, that is parent company auditor, and Hanuman and Associates, that is the subsidiary company auditor, as auditors of the parent company and the subsidiary company respectively. Right? So what are the roles and responsibilities of the principal auditor and the roles and responsibilities of the another auditor? Right? So what is the responsibility? Like what I just discussed with you, advise the other auditor, discuss with the other auditor, coordinate with the other auditor. Right? So what does it say? It is necessary to issue the written communication as principal auditor to the other auditor. Then advise the other auditor for matters which you think will have an important bearing on the other auditor's work. Right? Then also send a questionnaire to the other auditor regarding the information or discharging of his duties. Right? So yes, SA 600, using the work of another auditor. Right? So role of the principal auditor, advise the other auditor, issue a written communication, advise, and also send a detailed questionnaire. Then what is the role of the other auditor? He has to coordinate with the principal auditor. He cannot say, principal auditor, I don't listen to you. No. You have to listen to him, right? So what does it say? Coordinate with the principal auditor, ensure compliance with the relevant statutory requirement, and the other auditor has to respond to the questionnaire, which is being sent by the principal auditor on a timely basis. Right? So respond to the questionnaire. So the principal auditor has to send a questionnaire, and the other auditor, he has to respond to the questionnaire. Okay. Next one. Stone Private Limited was engaged in the business of manufacture of cycles. C.A. Chandra was appointed as auditor. Outing the year under audit, Stone Private Limited obtained working capital facility from Royal Bank for 10 crore, hypothecating the stock of goods as per the primary security. On inquiry, C.A. Chandra was informed by management that stock statements are furnished periodically to Royal Bank, and the details of the submission of the quarterly stock statement are as follows. right? So stock value as per the books of account and stock value which is submitted to the bank. The management of Stone Private Limited did not disclose the above variations in the notes to account forming part. The management replied that there are no variations as on the balance sheet date. So year end there is no, and they are of the view that stock statement furnished to bank is only a formality and need not be bothered. Or the statutory auditors. Is the contention of the management valid? As a statutory auditor, how should it deal with the same? And discuss the reporting requirements as per Companies Act and the CARO 2020, right? So this is regarding the clause 2B of the CARO. What is clause 2A? It is regarding the inventories, whether inventories have been physically verified by the management at reasonable intervals, and whether procedures followed for verification are they reasonable, right? And also discrepancies of 10% or more, have they been properly dealt with in the books of account? That is 2A. And then 2B is regarding what? Whether the company has at any point of time during the year been sanctioned the working capital limit in excess of 5 crore on the basis of security of the current assets, then whether the quarterly return statements which are submitted to the bank financial institutions, are they in agreement with the books of account, right? Whether the quarterly returns and statements submitted to the bank's financial institutions, are they in agreement with the books of account? Okay, right? So one, it says it is required to be disclosed as per schedule 3. So one, so now whatever is the reporting requirement in CARO, that they have added it in the schedule 3 disclosures also. Whatever is the reporting requirement in CARO has been added to the schedule 3 disclosures also. So one, it says schedule 3 requires the company to give the disclosures. Then auditor, as per clause 2B of the CARO 2020, whether at any point of time during the year the company has been sanctioned working capital limit in excess of 5 crore, right? Is from bank's financial institution on the basis of security of the current assets, whether the quarterly returns and statements, are they in agreement with the books of account, right? So the above clause requires if it's in excess of 5 crore, so here it is 10 crore, right? Secondly, the quarterly returns and statements, you have to comment whether they are in agreement with the books of account. Here what do we say? That they are not in agreement with the books of account. So stock value as per the book, stock value as per the quarterly statement, and the excess reporting being done in the 3 quarters, right? The excess reporting being done in the 3 quarters. Okay. Next one. In the course of audit of Great Samaritan Bank as at 31st March 2022, you observe the following. In a particular account, there was no recovery in the past 18 months. The bank has not applied the NPA norms as well as the income recognition norms to this particular account. When queried, the bank management replied that this account was guaranteed by the central government and hence these norms were not applicable. The bank has not invoked the guarantee. Please respond. Would your answer be different if the advance is guaranteed by the state government? Right, so what does it say? Now, we have the NPA norms, the RBI prudential norms for the asset classification and the income recognition. And now we have it for the asset classification and we have it for the income recognition. And what do the RBI prudential norms say? That central government guaranteed advances and the central government guaranteed advances need not be treated as an NPA provided the guarantee is not repudiated when invoked. And the central government guaranteed advances need not be treated as an NPA provided the guarantee is not cancelled when presented, not repudiated when invoked. Right. However, this does not apply to the income recognition. For the purpose of income recognition, it is to be treated as an NPA. And once you treat it as an NPA, that means the income recognition is to be done on the realization basis, on the cash basis. And this applicability is only for the central government guaranteed advances and not for the state government guaranteed advances. So state government guaranteed advances, the moment they are overdue for more than 90 days, you classify it as an NPA. And again, income recognition is to be done on the realization basis, the cash basis. Okay, right. So now what is the point over here? Government guaranteed advances. So for the purpose of income recognition, the income will not be realized unless and until it is realized. And for the purpose of asset classification, if it is guaranteed by the central government, then it says it needs to be treated as an NPA only when the central government repudiates its guarantee when invoked. So till the time it is not repudiated when invoked, no need to treat it as an NPA. However, this does not apply to the state government guaranteed advances. State government guaranteed advances in the normal course, they have to be treated as an NPA. Okay, right. So that is one question over there regarding the bank audit. Okay, right. In bank audit chapter, we have a discussion over there regarding the IT environment. Okay, let me go to bank audit chapter because I just want to check that all of you have also studied the bank audit chapter. So little bit, 2, 3 questions are coming in my mind, which I should be discussing with you regarding the bank audit. And these questions are awaited to be asked in the exams. Okay. Just give me a moment. I'm just searching for the page. Yes. We'll start from the beginning. Right. So in case of the bank audit, we have one question over there regarding the IT environment in the bank. Right? So IT environment of the bank, right? So we talk about the core banking solution, right? We talk about the core banking solution, the centralized online real-time electronic system of banking, right? The core banking solution. So now when you know that the bank is operating in the IT environment, what information should the bank provide to its auditor regarding the IT environment? ये question है. And a very specific question, what information the bank should provide to the auditor regarding their computer environment, regarding their IT environment. So what information should be provided? One, information regarding their IT policy, bank's IT system, and also what are the various reports which are generated from the system. Right, so IT policy, structure, environment, and process of generating the various information. Then after that, the bank has to provide the information to the auditor regarding how they do the data processing and how they ensure the integrity and the security of the data. Right, so how the data processing is done, that whenever any customer withdraws the money, how the processing of, or he puts a request for an FD, how the processing of the data is done, how they ensure the data integrity and the data security. Right, then all of a sudden some disaster happens, but still how does the business continue? So the business continuity plan and the disaster control plan. So two plans over there, the business continuity plan and the disaster control plan, that all of a sudden there is a fire or flood or so. Okay, then how do they pass the accounting manual and the critical accounting entries and the process involved in the IT system, right? So accounting manual and the critical accounting entries. Right, this information the bank has to provide to the auditor. Then controls over two things, controls over the key aspects, various account head, expense booking, overdue identification, and controls over the recording of the various e-banking and internet banking products and channels. And the next two are regarding the reports, the MIS reports being generated and their periodicity, and the major exception reports and process of generating, including the embedded logic. Right, so what is this? What information the bank needs to provide to the auditor regarding their IT environment. Okay, right, then you have a question regarding the key security control aspects in case of a computerized bank. So you're doing the audit of a computerized bank. What control should be there in that bank? Right, so one control, data which is being entered into the computer system, it is authorized, accurate, and complete. Then in case if the system, due to power failure, it shuts down and then it starts again, it says the restart of the system should happen without distorting the completion of the entries and the records, right? Without distorting the completeness of the entries and the records, right? So one, data, and then after that you have the restart, right? Then after that, what does it say? There should be no unauthorized amendments to the program. That means what? There should only be the authorized amendments being made to the program, and they should be, again, the account master should be authorized by the authorized personnel. The changes to be made should be authenticated, right? The changes to be made should be authenticated. So there should be no unauthorized amendments. That means there should be only the authorized amendments. So changes made in the parameters are properly authenticated. Right, then also what does it say? Account master balance cannot be modified except by the authorized personnel. So again, only no unauthorized changes, no unauthorized access. Right. Then after that, what does it say? There should be proper access control. Okay, access should be given on a need to know basis, and there should be proper segregation of duties. So proper access control and also the segregation of the duties. Then whether charges are calculated manually, whether the function is not regulated, whether it is properly accounted for, and how the exceptional transaction reports are being authorized. And last 2 points over there, account codes, whether they are authorized by the HO and the general ledger tallies with the balance in the subsidiary book. Right, so what is this? This is the key security control aspects in a computerized bank. Very damn specific question. You have all the knowledge regarding bank audit. 3 years of articleship, you only did bank audit. But now their question is coming in the exam regarding what are the key security control aspects. Now your mind should not apply any other key. Your mind should talk about only the key which they are talking about over here. Okay, data being entered into the system, complete, accurate, and authorized. Right? Then system should restart without distorting the information. No unauthorized amendments. Only the authorized changes are made. Then the changes are authenticated, right, by the authorized personnel. Then access control. Then there should be proper segregation of duties. Right? Then the account code should be authorized by the HO, and the general ledger tallies with the balance in the subsidiary books. Okay, right. Then you have the areas of the internal controls in the bank, then the CRR and the SLR ratio, verification of the advances, and then so damn interesting. Oh, in verification of advances, there is one very nice question over there. Right, in the verification of the advances, we have one question. Just give me a moment. Yeah, the substantive audit procedures for the verification of the advances of the bank. Right, so how do you do the verification of the advances of the bank? Right, the verification of the advances, what are the substantive procedures? One, you need to check for the master data and the single customer ID. Right, so one customer, he could have taken various credit facilities from the bank, or he could be availing different services of the bank. Right, so all that data, whether it is compiled together under a single customer ID. Right, so master data and single customer ID. Then it says you examine all large advances, and other advances you check them on a sample basis. Then accounts which have been identified to the problem accounts, again those need to be examined. Like say, when does an asset become an NPA? When it is overdue for more than 90 days. Say right now it is overdue for 60 days. Is it an NPA? Right now it is overdue for more than 60 days. Is it an NPA? No, the day it will become overdue for more than 90 days, it will become an NPA. But does it look like very soon this will become an NPA? And okay, very soon this account will become an NPA. Right, so what is that? The problem accounts. Right, yes. Then what does it say? The adversely commented upon accounts by the RBI, bank, internal, external inspection team or so. Then the restructured accounts, right? So one, you need to examine the large accounts. Then you need to examine the problem accounts. Then you need to examine the adversely commented upon accounts. Then you need to examine the restructured accounts. Then you need to examine the restructured accounts. Then you need to examine the quick or the early mortality account. That is within 12 months of the sanction of the loan, it is becoming an NPA. So that is called as a quick or an early mortality account. And apart from that, you need to check the completeness and accuracy of the interest being charged and carry out the appropriate analytical procedures. Right, so first point, master data and single customer ID. Then you have the large accounts, problem accounts, adversely commented upon accounts, restructured accounts, and the quick or the early mortality account. And then you have the completeness and accuracy of the interest being charged and carrying out the appropriate analytical procedures. Okay, right. Then after the advances, you have a very interesting discussion over there, which is regarding the verification of the deposits of the bank. Right, what are the different types of deposits of the bank that they are talking about over here? One, the current and the savings account. Then they are talking about the term deposits. Then the deposits designated in the foreign currency, and then the others and the general points over there. So that's regarding the verification of the deposits. Right, so now in the verification of deposits says account opening. Account is opened in whose name? And before opening the account, whether the KYC has been completed. Right, so savings account is opened or a current account is opened. Then it says you verify the individual accounts on a sample basis. Then you check the interest in those accounts on a test check basis. Then again, balance confirmation has been obtained periodically. Any debit balances should not be netted out with the liability side. Can it happen that I've kept a deposit with the bank and from the same bank I've taken a loan? Yes, but these two should not be netted off. And inoperative account, there is no transaction which has taken place in that account for a period of 2 years. Then what does it say? It is called as an inoperative or a dormant account, right? So again, these accounts should be revived only with the proper authority. Right, so those are the current and savings account. I am waiting for a question on this one to come in your exams. And Aarti ma'am can wait. Then I can wait for the question to come. But can you wait? No, 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 no. For you, you never know if it comes in this exam. Right? So audit procedures for the verification of the current and the savings account. Right? So account opening, KYC, whose name it can be opened. Then individual accounts, interest, then the confirmations and the debit balances. And the last one is the inoperative accounts. Right? Then term deposits, FD, the deposit receipts and the cash certificates. Bulk deposit if it is 2 crore and above. So that's again a candidate for the MCQ. Right? Then in case of foreclosure, that is you had opened an FD for 5 years, but then after that you decide to close the FD or break the FD after 2 years. Right? So foreclosure penalty. Then if there is any recurring deposit and the correctness of the interest being charged. Right? So that's regarding the term deposit. And then you have the general. What is one interesting point in the general that they are talking about over here? Okay, you take a OD from the bank and you take an overdraft from the bank of 10 lakh. That overdraft which you take from the bank, 10 lakh rupees, you keep it as an FD with the bank. So you take an OD, bank has given you 10 lakh. Then that 10 lakh, you keep it as an FD with the bank. And now you tell bank, I have FD of 10 lakh, please give me a loan against this. So already you took the OD from the bank only, and now that OD you kept it as a deposit, and now against the security of the deposit you are asking for one more loan from the bank. So what is that? That's the case of the inflated deposits. Some customers might be given overdrafts near the balance sheet date, and the amount may be placed as the deposits with the bank, and further advances may be given on the strength and security of these deposits. So it will lead to inflated deposits as well as it will lead to the inflated advances. Okay, right, then you have the contingent liability. Or you don't know, they asked this question in the exam. What is the audit approach? You say, ma'am, we know. So if you know, wonderful, but you have to know the reality ki, my God, kya question पूछते exam में? Audit approach for doing the audit. Now, innocent, just look at the sparkle and twinkle in your eyes. Such innocent students write down such innocent answers regarding what are the different contingent liability, bank guarantees and bills sent to the bank for collection, and claims against the bank not acknowledged as debts, and then pay liability on partly paid up investments, right? Acceptances, endorsements and obligation, all this you write down. And उनका क्या है? According to them, they are asking you the audit approach. Audit approach means it says that whenever you are doing the audit of the, what am I discussing with you? Whenever you are doing the audit of the contingent liabilities of the bank, you should obtain the written representations from the management. Now, regarding what should you obtain the written representation from the management is the question regarding the audit approach. Oh my God, such big tears coming. Oh, I wish I could have been there to wipe them with a tissue. No problem. Okay, right. 0 mark. Haan, ye, at least reality pata hai ki 0 mark. Okay, right. No, you'll not get 0. Before the 0, let there be a 6. Before the 0, let there be at least a 5 or a 7. So wonderful if there is a 7 before the 0. Before, not after. After, to again problem. Okay, right. So what we are talking about over here is the audit approach. So it says, auditor, you need to obtain the written representations from the management. What written representation you will take from the management? That all the contingent liabilities are nothing but your off-balance sheet transaction. So whether all off-balance sheet transactions have been accounted in the books only when the transaction takes place. So you'll continue to show it in your contingent liability. But if the bank guarantee is being invoked, if it is to be honored, then it has to be shown as your provision. Then it needs to be recorded in the book. So accounted only when the transaction has taken place. Then it is accounted only after following the due procedure. Then it is supported by the underlying documents, right? So all off balance sheet transaction, those are the first 3 points. Then all year and contingent liabilities have been disclosed. Then these disclosed contingent liabilities do not include any crystallized liability. Because bhai, agar crystallized hai, so then it has to come under the provision. It should not come under the disclosure as a contingent liability. Then it says the estimated amount shall include the best estimate of the particular contingent liabilities. Then any guarantees issued on behalf of the directors, whether appropriate steps have been taken. And in case if the possibility of the outcome is remote, then what does it say? It need not be disclosed even as a contingent liability. It need not be disclosed as a contingent liability also if the possibility of outcome is remote. Right, if the possibility of the outcome is remote. Okay, right. So all contingent liabilities, have they been accounted for after when the transaction takes place? Are they entered after following the due procedure? Are they supported by the underlying documents? All off balance sheet transaction. Then what does it say? All year-end contingent liabilities have been disclosed. Then disclosed contingent liability do not include the crystallized liability. They include the best estimate of the amount. Then guarantees given on behalf of the directors, steps have been followed, and the disclosed contingent liabilities do not disclose any liability where the possibility of the outcome is remote. Right, where the possibility of the outcome is remote. Okay, right. So that is again a question over there regarding the contingent liabilities, and then you also have the verification of the contingent liabilities. Okay, right. So anyways, I also wanted you to have a look at one more book over there. Right, you have the, yes, one, you have the regular versions of the book, and then you have the Audit Express. And this time the Audit Express has been what do you say, designed in an annual report or a tabular format, side by side reading over there, so that some students, they say we don't want the question bank, we just want the theory, we want the juice, we want the entire extract of the syllabus which is required to be studied, with the slight reference over here and there regarding when these questions have come in the exam, or a few important questions over there. Right, so keeping that in mind, in this particular format, right, around 409 pages. Right, now this 409 pages include the entire syllabus. You say, ma'am, now no use telling us because we are all set to write the exams right now. I know that, and I wish the time should never come for you to require this book or so. But in case if you need to advise your juniors or something, if they already have some book and now they want the updated version or so, then you can just tell them about this particular book. Okay, right. So there are the question references also given over there, and then after that a few important questions. Not all. If you look at our regular book, it has like innumerable questions over there, but this one, they have the very specific selected questions over there. Okay, right. So tried a new format. So let's hope for the best, that it's beneficial, and do let me know your feedback also for those students who are already using the Audit Express book. Okay, right. So it's the latest one. Even the amendments in the peer review chapter and all of those have also been incorporated in this book. And again, the entire book, if you have a look at it, it is each chapter is having a different color. So when you look at the physical hard copy of the book, it yes, it's more appealing and interesting over there. Okay, right. So in case if it just comes out, right. So these are the huge chapters which we have in the beginning. Okay, anyways, I think you could have understood what is so different color combinations being used over there. Right. So anyways, now coming back to our original discussion, which was regarding the MTP, right? We are discussing the questions in the MTP, right? So in the MTP, we were seeing the question regarding the bank, right? We were seeing the question regarding the bank, and then happened to come to bank audit, and then we also happened to have a look at the Audit Express book. Okay. Right. So now let's come over here to the another question regarding the bank. In the course of audit of bank, you found that the bank has sold certain of its NPA. Sell purchase of NPA. Do you know that? And a sell of its NPA. Mention any 2 points of audit check that are relevant to this area of checking. Any 2 points. When we start writing, we write so many points over there. Okay. Hmm? Okay, because of the book it might be lagging. Okay, right. So anyways, now let's look at this question over here. Sale of the NPA. Can one bank sell its NPA to another bank? Okay, do you take our NPA? Yes, what does it say? But once I sell this NPA, I will never take them back. Without recourse. They have to be sold as per the on the cash basis. They should have remained an NPA in your books at least for 2 years. Then bank will not assume any risk in respect of the NPAs once they have been sold. Right. So you need to check the board of directors policy for the sale purchase of the NPA. Then only those NPAs can be sold which have remained an NPA in your books for at least 2 years. Then they have to be sold without recourse. Bank will not assume any risk in respect of the NPAs once they have been sold. They have to be sold on the cash basis. Then on the sale, the NPAs have to be removed from the books. Any shortfall. So say the value of the NPA was 35 lakh and you sold it for 30 lakh. Right, so 5 lakh is immediately to be charged to the profit and loss account, but you say sell it for 40 lakh. And then what does it say? No profit is to be recognized, and the excess provision is also not to be reversed but retained to make the shortfall loss because of sale of the other non-performing financial assets. Okay, right. Then without recourse. Okay, so what is without recourse? Without recourse means you're not going to take them again. You're not going to purchase those NPAs again. And once one bank sells its NPA to another bank, then the other bank says, "Arey, what type of NPAs you've given us? Nobody is giving this. Please take them back." He says, "No, no, no, no. We've sold it. We'll never take them back again from you." Okay. Right. So that is regarding one question over there. Now coming to another question. Right. Now coming to another question, which is regarding the management of Money Prab Limited, a manufacturing unit, does not accept the recommendations for improvement made by the operational auditor. Operational auditor is telling them make improvements, make changes. And what do they say? No. Suggest an alternative way to tackle the hostile management. Can anybody give me the term? Operational auditor. There is a lot of breeding of antagonism towards, there is an unwelcomed atmosphere, unfriendly atmosphere towards the management operational auditor in the organization. So in order to compensate for this unfriendly, unwelcomed atmosphere or attitude towards operational auditor, how should they tackle the hostile management? What is the term which you need to use in your answer? There has to be the, yes, there has to be the participative approach. Exactly. So whatever recommendations the operational auditor is going to give, these recommendations you should first discuss them with the people who have to implement them. And then after that, it says your recommendations will be having the more acceptance. Okay. So while conducting the operational audit, the auditor may come across many irregularities and areas where improvement can be made. These suggestions and recommendations for improvement may not be accepted by the hostile managers, hostile, unfriendly. And in effect, there may be a cold war, hey Bhagwan, between the operational auditor and the managers. This would defeat the very purpose of operational audit. The participative approach comes to the help of the auditor. So it comes running to the help of the auditor. In this approach, the auditor discusses the idea for improvement with those managers who have to implement them and make them feel that they have participated in the recommendations made for the improvement. By soliciting the views of the operating personnel, the operational audit becomes a cooperative enterprise. The participative approach encourages the auditee to develop a friendly attitude towards the auditor and looks forward to their guidance in a more receptive fashion. When the participative method is adopted, resistance to change becomes minimum, feeling of hostility disappears and gives a room for feeling of the mutual trust. Right? Team spirit is also developed. Right? The auditors and the auditee together try to achieve the common goal. Right, so what does it say? Participative approach, right? What is important over there is the participative approach. Okay. Nageshwar, a chartered accountant in practice, has been elected as the treasurer of the regional council of the ICAI. The regional council had organized an international tour to a tour operator during the year for its members. During the audit of the regional council, it was found that Nageshwar had received a personal benefit of 40,000 from the tour operator. Comment with reference to the Chartered Accountants Act and schedules thereto. You made treasurer. And what you did? Treasurer may say 40,000 personal benefit. What are you doing? You are bringing the, what are you bringing? Nothing. Or you are bringing no something. You're bringing the disrepute to the profession. And when you bring disrepute to the profession, you're guilty of other misconduct under clause. You're guilty of other misconduct under clause 2 of part 4 of the first schedule, right? Clause 2 of part 4 of the first schedule. What does it say? Section 21 of the Chartered Accountants Act provides that a member is liable for disciplinary action if he is guilty of professional or the other misconduct. Right? Then other misconduct is discussed under part 4 of the first schedule and part 3 of the second schedule. Right? Misappropriation of the funds. In the given case, receipt of personal benefit of 40,000 from the tour operator would be guilty of the other misconduct. Right? Guilty of the other misconduct, bringing the disrepute to the profession. So in the opinion of the council, brings disrepute to the profession or to the institute as a result of his action, whether or not related to his professional work. Okay. Next one, question number 4. Comment on the following in the light of certificate of compliance of conditions of corporate governance to be issued under SEBI LODR for a listed company, one among the top 1,000 listed companies, where the board consists of 20 directors with a non-executive director as its chairperson, and further, one non-executive director has attained the age of 72 years. What does it say? Okay, you cannot have a person who has attained the age of more than 75 years as a director in your company, non-executive director. If you want such a person to be a non-executive director, then a special resolution is required to be passed. But when it is more than 75 years, here it is only 72 years. So is there any non-compliance? No, there is no non-compliance. Then one of the director is a director in 8 other listed entities, or you cannot be a director in more than, yes, you cannot be a director in more than the 7 listed entities, right? So cannot be a director in the 8 listed entities. The managing director is serving as an independent director in 4 listed entities, of which one entity's equity shares are not listed on the stock exchange. So if you're a managing whole-time director, then you cannot be an independent director in more than the 3 listed entities, and here he is an independent director in 4 listed entities, of which one shares are not listed on the stock exchange. So if not listed on the stock exchange, then okay. Right? So managing director is serving as an independent director in 4 listed entities, of which one's equity shares are not listed on the stock exchange. Right? So if equity shares are not listed, it is not to be counted. One independent director has been serving as an independent director in 8 listed entities. No, you cannot be a director in more than 7 listed entities. You cannot be an independent director, obviously, in more than the 7 listed entities. Okay. Right one. Right. So one non-executive director attained the age of 72. So special resolution is required for 75. Right. So there is no violation. One of the director is a director in 8 other listed entities. He should not be a director in more than the 7 listed entities. Then managing director is serving as an independent director. So then he should not be an independent director in more than 3 listed entities. And here what does it say? He is serving as an independent director in 4, but one of them, their equity is not listed. So not exceeding the prescribed limit of the 3 entities. And one independent director, he cannot be a director in more than the 7 listed entities, right? He cannot be a director in the 8 listed entities. Okay, right? So that is regarding the SEBI LODR. Next one, right? Vrinda Auto, a partnership firm, is engaged in manufacturing of automobile spare parts, having factory at Surat. Mahavir was appointed as the tax auditor of Vrinda Auto for 22-23. While carrying out the tax audit under section 44AB of the Income Tax Act, Mahavir observed the following. Interest of rupees 50,000 paid to vendor Ghansham, who was registered under the MSME Act. Yes, interest being paid to MSME suppliers. Is it allowed as an expense under the Income Tax Act? No. It is not allowed as an expense under the income tax law. It is a disallowed expenditure under the income tax law. Where do you report this in the form 3CD? You report it under the clause 22 of the form 3CD, which is regarding the interest to the MSME suppliers, right? So this is the clause 22. Then interest payment of 10,000 was incurred in relation to the earning exempt interest income from tax relief bonds. Right, so exempt income, what does it say? Any expenditure incurred in relation to the exempt income, that expenditure should not be allowed as a deduction, right? That expenditure should not form part of your total expenditure. If your total income includes any exempt income, right? So that comes under the clause 21, amount debited to the PNL, right? 21H. And sum of 1 lakh was received from Ghansham for sale of one plant and machinery. So you wanted to transfer a capital asset, but due to non-compliance of one of the conditions as specified in the contract with Ghansham, Vrinda Auto forfeited 1 lakh during AY 22-23 as per the forfeiture clause mentioned in the agreement. Right? So what is this? Forfeiture of advance received towards the transfer of a capital asset. Forfeiture of the advance received towards the transfer of the capital asset. Right? So what is that? That is the clause 29A. Forfeiture of advance received towards the transfer of a capital asset, right? Forfeiture of the advance received towards the transfer of the capital asset, right? So clause 22, which is regarding the interest inadmissible under the MSMED Act, right? So Mahavir is required to report the payment of interest of 50,000 for vendor Ghanshyam, who is registered under the MSME under clause 22 of form 3CD. And 21H, what does it say? The tax auditor is required to report about the amount of deduction inadmissible in terms of section 14A in respect of the expenditure incurred in relation to income which does not form part of the total income. And then 29A, whether any amount has been chargeable to tax under 5629. What is 5629? For income, 56 is what? The income from the other sources. Right? So forfeiture of advance received towards the transfer of the capital asset. If yes, provide the nature of the income and the amount thereof. Right? So the same needs to be reported under 29A of the form 3CD. Okay, right. Coming to the next question. Bahubali, a chartered accountant in practice, wrote 2 letters to Shubhlab, chartered accountant, a firm of CA, requesting them to allot him some professional work. As he did not have a significant practice or client, he also wrote a letter to PQR, a firm of CA, for securing professional work. Mr. Smart, another chartered accountant, informed ICAI regarding Bahubali's approach to secure the professional work. Is Bahubali wrong in soliciting professional work? Comment with reference to the Chartered Accountants Act and the schedules there too. Okay, right. So what does it say? Wrote 2 letters requesting them to allot him some work to another CA. Then for securing professional work, right? So what is this? This is the exception to clause, right? This is the exception to the clause. Yes, the most is where you see the maximum number of question of ethics over there. Right? Clause 6 of the part 1 of the first schedule. Right? So let's just have a quick recap of clause 6 of the part 1 of the first schedule. What does it say? As per clause 6 of part 1 of first schedule to the Chartered Accountants Act 1949, a chartered accountant in practice is deemed to be guilty of professional misconduct if he solicits client or professional work directly or indirectly by circular, advertisement, personal communication, interview, or by any other means. And solicits client or professional work directly or indirectly by circular, advertisement, personal communication, interview, or by any other means, provided that nothing contained herein shall be construed as preventing or prohibiting a member from applying, requesting, inviting, securing professional work from another CA in practice, right? So within the CA fraternity, applying, requesting, inviting, securing professional work, is it allowed? Yes. And second, what does it say? Responding to tenders or inquiries issued by various users of professional services from time to time and getting the professional work as a consequence, right? Clause 6 of part 1 of the first schedule. What is it? Solicits client or professional work directly or indirectly by circular, advertisement, personal communication, interview, or by any other means, provided that nothing contained herein shall be construed as preventing or prohibiting. Nothing can stop a member from applying, requesting, inviting, securing professional work from another CA in practice. That is what is happening in our question. Or responding to tenders or inquiries issued by various users of professional services from time to time and getting the professional work as a consequence. And regarding the tenders and inquiries, we have some guidelines over there. Right? Tenders and inquiries. First thing, what you need to check for tender inquiry? First thing, what you need to check for tender inquiry, whether tender inquiry is exclusively for the chartered accountants or whether it is also there for the other professionals. If it is open to the other professional, then it says CA you can respond to any tender or inquiry. It is exclusively for chartered accountants. Then CA, you need to check whether the minimum fees have been prescribed in the tender document itself. Whether the minimum fees have they been prescribed in the tender document itself. If minimum fees have been prescribed in the tender document itself, then what does it say? CA, no problem, you can respond to any tender inquiry. But minimum fees have not been prescribed in the tender document, then it says CA, you should not respond to the tender or inquiry. If you still respond, then CA, you will be guilty of professional misconduct under clause 6 of the part 1 of the first schedule. And then CA will be guilty of professional misconduct under clause 6 of part 1 of the first schedule. Minimum fees, not maximum fees, the minimum fees, right? They should be given in the tender document itself. Is it clear to all of you? Right. So that is the clause 6 of the part 1 of the first schedule, right? So here what does the answer say? Is the CA wrong in soliciting the professional work? No, the CA has not committed any professional misconduct by soliciting the professional work, right? By soliciting the professional work. Okay. Jambu, Gautam and Vishud. Oh my God, what names. Anyways, what's in the name? Are partners in a firm sharing profits and losses in the ratio of 4:3:2. Okay. The partners have agreed to take Rishabh as a partner with effect from 1st April 2023 as 1/5 partner. 1/5. What are the important steps involved while conducting investigation on behalf of Rishabh, the incoming partner? Right. So investigation on behalf of an incoming partner, right? So there is the partnership firm and there is an incoming partner. They are telling, come join us as a partner, but this fellow is in a dilemma, okay, whether I should join as a partner or no, right? That is why what he does, he goes to a CA. He says, they are giving me offer of partnership, should I accept or no? So CA says, wait, I will go on your behalf and do the investigation. And so investigation on behalf of an incoming partner. So what, yes, due diligence. So what would you like to do? Yes, you will like to check the history of the partnership firm, the profitability, the rate of return of the partnership firm, right? Then also the provisions of the partnership deed, right? So the history, the provisions of the deed of the partnership, the record of profitability, the asset liability position of the partnership firm, right? Then the orders on hand, then the loan finance, if any, taken by the partnership firm, the quality of the key managerial personnel, the important contractual and legal obligation, reason, already you have 3 partners, why you want one more? So reasons for admission of a new partner. Then what are the alternative business avenues? So the CA Rishabh, rather than joining, not CA, whatever it is, Rishabh, rather than joining them as a partner, should he better start his own practice, or should he doing his own business that will be more beneficial, or simply don't do anything, keep the money in the FD and you'll make more money? Possible, no? A business, because it might go into loss also. That is why they are taking one more partner over there. And so alternative business avenues, right? So first-hand knowledge about the specialization, computation of goodwill on the admission of the partner. Any special clause exists in the partnership for allowing admission in the future of a new partner or so. And any incomplete contracts which will go on to the reconstituted firm. Now question comes in exam for 5 mark to 4 mark, and they to write full. Your data on whatever they have in the study material, now full they will write. And now we innocent students, no, we are very innocent. But now how? Yeah, is it okay to write due diligence or investigation? What is compulsory? It's better to stick around what ICI says. ICI calls this investigation. You call it as investigation, because boss is always right. It is a type of due diligence. You are evaluating a potential business opportunity, but it is called as investigation on behalf of incoming partner. And so anyways, you have to write down the points rather than giving any heading over there. Okay, right. So that is regarding the investigation on behalf of the incoming partner. Okay, next one. Name me a chartered accountant in practice is the auditor of Yuvraj Limited. He advised, and a name me CA is giving advice to managing director of the company to include orders under negotiation and sale to reflect higher profit and better financial position for obtaining bank loan in the future. He is telling management, I will give you an advice कि ये जो भी तुम्हारे order negotiation में है ना, ये सारा sale में डाल दीजिए. All this you put it into sale. So sale will look fatter. If sale will look fatter, you'll get more bank loans. Nice. Okay. Name me. Thereafter give clean report on the balance sheet, because he is only giving this advice. prepared without examining the accounts. Oh my God. Comment with reference to the Chartered Accountants Act and schedules there too. Without examining accounts and giving advice कि जो भी order negotiation में है, that also you show it in the sales. So then what you do? You say, oh my God, this chartered accountant not only bringing the professional, what you say, not only guilty of professional misconduct, but also guilty of the other misconduct, because you know he's bringing disrepute to the profession by giving such type of advices. And he is bringing the disrepute to the profession, and he is also grossly negligent in the conduct of his duties. Right? So clause 7 part 1 of the second schedule does not exercise due diligence or is grossly negligent in the conduct of his professional duties. Many of you 712 is applicable. Not diligent. You say, ma'am, right now, please don't tell us anything. We are already in such a delicate situation. So please, ma'am, and don't, poke us anymore, because we are already like, in a very, very, uh, what do you say, not a very comfortable situation, just few days away from the exam hall. And then, the tempo is building, the water is boiling, but, so much of pressure and all. But relax. Whatever, you just put in your best. That's all what is required. Okay, right. So does not exercise due diligence or is grossly negligent in the conduct of professional duties. And second one, 241, brings disrepute to the profession or to the institute as a result of his action, whether or not related to his professional work. Next one, while verifying the employee records in a company, it was found that a major portion of the labor employed was child labor. Oh my God, that means they are not following with the child labor laws. On questioning the management, the auditor was told that it was outside the scope of his financial audit to look into compliance with other laws. Comment in accordance with the relevant standards on auditing. Right, so do we check the compliance? You're diligent. Oh, that's amazing. Okay. Right, so does it attack 812? Huh? So without examining the records, so it might come. But more of that example of CA giving clean report and giving this bad advice to the management, it comes under the, right, it comes under the 712. Okay, right. Anyways, employee records in the company. Major portion of the labor employed was the child labor. Right, and he was told that it's outside the scope of his audit to check for compliance with other laws. No, right, it is very much within the scope of the audit itself. Right, so what does it say? For other laws and regulations, auditor, you need to perform the specified audit procedures. Right, for other laws and regulations, you need to do the inquiry and the inspection. And if management does not allow you to check the compliance with the other laws and regulation, then if the management does not allow you to check the compliance with the other laws and regulations, then it will be a limitation on scope. And what happens due to a limitation on scope? The auditor will have to modify his opinion. Okay, right. So as per SA 250, consideration of laws and regulations, the auditor shall obtain evidence regarding those laws and regulations which have a direct effect. Like income tax law, it has a direct effect on the financial statements. But for other laws and regulations, what does it say? The auditor will perform the specified audit procedures in the given case. And management is saying that other laws, it is not, yes, it is outside the scope of financial audit, it is not acceptable. Right? The auditor should ensure the disclosure of the above fact and the provision for the cost of fines, litigation, other consequences. If the auditor concludes that non-compliance has a material effect on the financial statements and it has not been adequately reflected in the financial statements, the auditor shall express a qualified opinion or an adverse opinion. Okay, right. So that is regarding the SA 250, consideration of laws and regulations. Next one, CNAG may direct the appointed auditor about the manner in which the accounts of a government company are required to be audited, and thereupon the auditor so appointed shall submit a copy of the report to the CNAG of India. What are the relevant sections of the Companies Act and the steps involved in the audit of the government companies? Right. So basically, they are asking you what are the powers of the C&AG, the Comptroller and Auditor General of India, in case of the government companies. Right. What are the powers of the CNAG of India in case of the government companies, right? So what are the powers of the CNAG? One, to appoint the first auditor and the subsequent auditor. Second, to issue directions to this auditor regarding the work to be done. right? Third, to conduct a supplementary audit and also to issue a supplementary audit report if required. And also they also have the power to conduct a test audit of the accounts of the government company. They also have a power to conduct the test audit of the accounts of the government company, right? So one, appoint the auditor, then issue directions to this auditor, then conduct a supplementary audit, then issue a supplementary audit report, and in addition to that they also have the power to conduct a test audit of the accounts of the government company, right? Also have the power to conduct the test audit. Okay, as of 31st March 2022, while auditing Secure Insurance Limited, you observe that a policy has been issued on 25th of March for fire risk favoring one of the leading corporate houses in the country without the actual receipt of the premium, and it was reflected as premium receivable. The company maintained that it's a usual practice in respect of big customers, and the money was collected on 5th April, so next year. Okay, you further notice that there was a fire accident in the premises of the insured on 31st of March and a claim was lodged for the same. The insurance company also made a provision for the claim. When was the policy issued? 25th March. When was the premium received? 5th April. So from which day will the premium cover start? The risk cover start? The risk cover will start from the date of the receipt of the premium, because no risk assumption without premium, and no risk assumption without premium, right? So what does it say? No risk can be assumed by the insurer unless the premium is received, right? What does it say? According to section 64(5)(b), no insurer shall assume any risk in India in respect of any insurance business on which premium is ordinarily payable in India unless and until, number one, the premium payable is received or is guaranteed to be paid by such person in such manner within such time as may be prescribed, number two, or unless and until the deposit of such amount as may be prescribed is made in advance in the prescribed manner. So premium is received or is guaranteed or the amount has been deposited. Right, in view of the above, the insurance company is not liable to pay the claim and hence no provision is required. Hence no provision for the claim is required. Okay, next one, a different type of question over there, right? So again, a new question which we see over there. During the process of extracting the exception reports, the auditors noted numerous purchase entry without valid purchase order. So without purchase order, purchases are being made. In terms of the percentage, about 35% of the purchases were made without valid purchase order, whereas few purchase orders were validated after the actual purchase. So few cases no purchase order, few cases purchase order after the purchase. Also, there was no reconciliation between goods received and goods ordered. You are required to briefly explain the audit procedure to address the validity of the account balance level. And next one, what are the consequences if the quality review board notices major non-compliance with the requirements of the SQC or the standards on auditing or the accounting standards? Right, so quality review is done and the quality review board, they identify a lot of non-compliances. So what are the actions which can be taken by the quality review board, right? What are the actions which can be taken? Okay. Right, so in the given scenario, there's so much of wrongdoing which is happening in the purchases and you want to check the validity of the purchases of the company. So what you do, you make a selection of the purchases, review the correspondence with the vendor, the purchase requisition, the reconciliation, right? So make a selection of the purchases. That means you select the sample. Then review the vendor listing along with the aging details. Okay, since how many days is this vendor balance outstanding? Follow up the material amount paid before the normal credit period and analyze the reasons for the exception. Right, then meet with the company's purchase officer and obtain responses to our inquiries regarding the purchases being made without the purchase order and discuss the summary of such issues with the client, right? So discuss. So meet with the company purchase officer, discuss the summary of the issues, make a selection of the purchases and review the vendor listing, right? So that's an important question over there. New variety of question C. Okay, and now what are the actions which can be taken by the quality review board on the basis that they come to know that there is a non-compliance with the SQC or the accounting standards or the auditing standards? So one, it says if it matter is very severe, that there is a big non-compliance with the accounting standards on auditing or so, it says refer the matter to the council of the ICAI. So make recommendations to the council. Second, the matter is not very material. Then what does it say? Issue an advisory to the AFUR. AFUR, the audit firm under the review. And third, the matter is very, very trivial. Then what does it say? You just inform it to the particular, yes, AFUR, and the matter is to be considered to be closed. Right. So one, what does it say? If the matter serious non-compliances, you make recommendations to the council. That is, you refer the matter to the director discipline of the ICAI. For matters which are not so material, what you can do, you can issue an advisory and guidance to the AFUR. Right. Then if there is a non-compliance, you also need to report the non-compliance to the regulatory body, like in case of a listed company to SEBI. Then you also need to inform the AFUR as to the findings of the report. And in case if reference is made by any regulatory body, and that is why the quality review is being done, then again you need to report the results to the regulatory body and consider the matter complete and inform the AFUR accordingly. Right? So what actions can be taken by the quality review board if there are any non-compliances identified? One, they need to make the recommendations to the council, or they can issue an advisory to the AFUR. Again, they need to report the non-compliance to the regulatory body, also intimate the findings to the AFUR. In case if the review is being done because of the order of a regulatory authority, then again the results of the review are to be communicated to the regulatory body and consider the matter complete and inform the AFUR accordingly. Okay, right. So that completes a few set of questions over there, which is there in the MTP as May 23, the series 1 over there, right? And then after this is only the 70 marks of the paper. So, you know, to discuss the paper, we require like 1.5 hours. So to write, you require more time, no? And apart from that, we are yet to see the MCQs in this part of the paper, right? So let's quickly have a look at the MCQs. Okay, before I come to the MCQs, yes, will you tell me clause 8 of CARO? Yes, before I come to the MCQs over there, yes, will you tell me what is the clause 8 of the CARO? कोई कोई बच्चे बीच में कहाँ चले जाते हैं, इतना यूट्यूब में इधर उधर घूमते रहते हैं. ओके, पता नहीं, परेशान हो जाते हैं. Right, so clause 8. Yes, all these names which I'm seeing over here, I want to see all these names in the merit list or exemptions and of CAI. Will say, ma'am, we'll reach to your expectations, no problem. अभी के लिए बताओ clause 8 क्या है? Income tax. Okay, what is clause 8? Undisclosed income. और ये cost audit नहीं रे बाबा. That's cost records anyways. There's nothing about cost audit over there. Right. So clause 8. What is clause 8? It is regarding the undisclosed income. And transactions which are not recorded in the books of account have been surrendered or disclosed as income during the tax assessments under the income tax law. Whether the previously unrecorded income, whether it has now been properly recorded in the books of account. So 2018 you evaded some taxes. And now in 2023, you're surrendering. Okay, yes, I did this tax evasion. So now that time you did not record it in the books of account. But now in 23, is it being recorded in the books of account? 100% it will now come in your books of account as a prior period item. Right? It will come in your books of account as a prior period item. Are you getting that? Transactions which are not recorded in the books of account have now been surrendered or disclosed as income during the tax assessments under the income tax law, whether the previously unrecorded income has it now been properly recorded in the books of account, right? Whether it has been properly recorded in the books of account. Okay, what is clause 15 of CARO? What is clause 15 of CARO? Quick. Yes, whether the company has entered into any non-cash transactions, then whether they are in compliance with section 192 of the Companies Act. Right? So whether the company has entered into the non-cash transactions, whether they are in compliance with section 192 of the Companies Act, right? So that is regarding the non-cash transactions. Okay, right. Yes. Which clause in CARO talks about the core investment company? Which clause in CARO talks about core investment company? Clause 16, C, and 16D. Right? What is clause 16A? Whether the company is required to be registered under section 45IA of the RBI Act, then whether the registration has been obtained. Then what is 16B? Right? Whether the company has conducted any non-banking financial or any housing finance activity without a certificate of registration. Right? Then whether the company is a core investment company, whether it fulfills the criteria of being a core investment company, and if it is an exempted or an unregistered CIC, whether it continues to fulfill the criteria of being an unregistered or an exempted CIC, whether it continues to fulfill such criteria. So if you're a registered CIC, whether you fulfill the criteria of being a registered CIC. If you're unregistered or an exempted CIC, then whether you continue to fulfill such criteria. And if there are a number of CICs which are part of the group, then indicate the total number of CICs which are part of the group. Right. Yes, what is a core investment company? Core investment company means more than 90% of your investment is into the particular group companies. Then out of that, more than 60% of your investment is in the equity in that group. Then you're not doing any trading activity other than for the purpose of the block sale. You're not trading into the securities of the company other than the block sale, and you're not engaged into any other financial activities other than your investment in the group companies, right? Not involved in any other financial activities. Okay, right? So that's the definition of the core investment company, right? That's the definition of the core investment company, and that is your clause 16, right? That is your clause 16 of the CARO, registration with the RBI and the NBFCs. Okay, right. Anyways, now let's come to this point over here. Again, I showed you the Audit Express, but that time the computer, it lagged or something like that happened. Now I'm trying to tell you something more because yesterday I forgot. So today I don't want to forget about it, right? So I'll try to mention, hopefully there is no lagging of the computer or so, which happens, right? So want probably experience of teaching to the inter students also to a more greater level, at a more India level or so, right? So for that wish of mine, okay, you say, ma'am, we have a wish to become chartered accountant, so like that, so for that particular wish, we have come up with a batch which is CA inter audit full syllabus, the फास्ट ट्रैक रिवीजन बैच इन हिंदी। और ऐसी बिल्कुल भी गलतफहमी मत रखना कि मुझे हिंदी नहीं आता है, मैं एकदम मस्त वाला हिंदी बोल सकती हूँ, है ना? और मैं इंग्लिश में भी पढ़ा सकती हूँ। कैन आई टीच इन इंग्लिश? यस। कैन आई टीच इन हिंदी ऑल्सो? यस, आई कैन नॉर्मली स्पीक इन हिंदी, okay, and I can normally speak in English also, so no problem over there. Okay, right? So the batch is from 1st May to 25th of May, 7 to 9:30 in the evening, 25 days, 2.5 hours every day, and 2 views backup, and the color module will also be provided along with it, some 419 pages of the notes. Access to MCQ app will be given, and all this, with the book courier to the doorstep of the student, it is at 999. And apart from that, the students who make a reference, you can become my brand ambassador, and if you become my brand ambassador and any student enrolls for the inter audit course, then in that case you get a referral bonus of 200 by Paytm or on your UPI, any of the UPI payment, you get a referral bonus of the 200 rupees over there. Okay, I don't think my heart will permit me to speak more than this, so I think I have already said enough about it, right? So now let's get back to our MCQ. Swami and Company is a firm of chartered accountant. The firm has 8 partners. The firm has good portfolio of stat audit. However, now they are looking out for the tax audit. However, they know there is some limit on the tax audit. So what is the total number of tax audits which can be accepted by the LLP, right? So 8 partners. How many tax audits per CA? 60 tax audits, right? So 60 into 8. What does it say? 480 tax audit reports. So there is no limit on number of tax audit. ऐसा तो नहीं है. All the partners can collectively sign 360. No, all the partners can collectively sign the 480 tax audit report, है ना? 480 tax audit report. Bahu and Subahu is an audit firm, old firm. और इतना story बनाया, peer review, raised considerations, concerns regarding audit documentation. Some of the information is missing from the audit file. Bahu and Subahu are in the process of establishing a robust mechanism for audit documentation. तो इतना बोला, फिर क्या बोलता है? Bahu and Subahu would like to understand the period for which audit documentation should be maintained. For what period audit documentation should be maintained, right? It should be maintained for 7 years, right? Audit documentation is to be maintained for the 7 years. Then Shripa Limited is in the business of manufacturing of tiles and sanitary ware. The company has large inventory every year. Annual turnover of the company is 3600 crore. The company has 9 plants across India. The management carries out physical verification of inventory at the time of reporting date. During 2022, it was found by the management that inventory sheets of 21 did not include 5 pages containing details of inventory worth 29.5 crores. So last year there was a misstatement. Management has included this inventory in the valuation of inventory for 22. Management has also explained that considering the size of the company, this may happen at times as the inventory is huge and lying at various locations. Moreover, the amount of inventory is insignificant if considered as a percentage of the revenue or inventory. State how will you deal with this matter as an auditor in the accounts of the company. Okay, since the matter is not relevant to current period figure, no reporting is required. Management should restate the financials to adjust the error. Otherwise, auditor may have to modify the opinion on the current year financial statements considering the materiality. Considering the matter is not relevant to the current year figures, the management may include a note and include an emphasis of matter paragraph because of the effect or the possible effect. No, so emphasis doesn't come in that case, right? So management should restate the financials to adjust the error. Otherwise, auditor may modify his opinion on the current year financial statements. Okay. Right. Shanti Limited is in the business of construction and infrastructure. The company is listed in India. The company has various projects. The functional currency is INR. The company has 5 joint ventures and various jointly controlled operations. The company has been audited by Sudarshan and Associates, a firm of chartered accountants, since the beginning. During 2022, new auditors were appointed as the statutory auditors of the company for 22. New statutory auditors have raised points relating to the consolidation procedures being followed by the company. Management did not agree to the observations of the auditor as they have been following this since many years now, and there are no observations of the previous auditor. Auditors have highlighted a point that joint ventures have been consolidated by the company in the standalone financial statements. Ye kya kiya? What is this that they have done? Joint venture consolidated in standalone? No, joint venture should be consolidated in the consolidated financial statements. However, the management has an argument that those are in the nature of operation and hence to reflect the true and fair view, it would be appropriate to consolidate the same in the standalone financial statements. Since the matter is for consolidation, which is more relevant for consolidated, no reporting is in respect of this matter would be required. Auditor should look at the materiality and the conservatism principle. Management should restate the financials to adjust the error relating to consolidation and standalone. Otherwise, auditor may modify his opinion on the current period considering the materiality. As per the requirement of India's joint venture, if consolidated and standalone, need not be consolidated again in CFS. Hey Bhagwan, what are they saying? Okay, so management should restate the financials to adjust the error relating to consolidation of joint venture. Otherwise, auditor may modify his opinion on the current year financial statements considering the materiality. Okay, ASOS is in the business of optics and imaging products. It's a wholly owned subsidiary of a Japanese company. During the course of audit, the statutory auditor observed that the company has not been deducting and depositing the TDS on salaries of expats. The auditor assessed that the impact of this can be significant. Management explained that TDS on salary of expats would lead to unnecessary hassles to the expats and that they serve the company only for a short period. How should the auditors of ASOS deal with this matter? Right? So there is a non-compliance with the law regulation. The auditor should agree to the management's view? No. Since the matter relates to statutory liability, the reporting requirement will not arise till the matter is not becomes disputed? No. Considering this as a statutory non-compliance, the auditor should look at the significance of the matter and report the same in Caro only, or the auditor should consider this in his main report along with Caro. So the auditor should consider it in the main report along with the Caro report also. Okay. Right. Then Gin Limited issued a prospectus in respect of an IPO, right, which had the auditor's report on the financial statement. There was an abnormal increase in the profits of the company, for which what was found that there was the manipulated sales of the company. The company emphasized that the auditor should have proceeded with suspicion and should not have followed the selected verification. The auditors were able to prove that they found internal controls to be satisfactory and did not find any circumstances to arouse the suspicion. Right, so the company was not able to prove that the auditors were negligent in performing their duties. Which of the following is correct? The stand of the company was correct in this case. The approach of the auditor looks reasonable in this case. Auditors should have involved various experts along with them to help in their audit procedure. In such type of engagement, the focus is always on management control. If the controls are found to be effective, then an auditor can never be held liable in respect of any deficiency or misstatement or fraud. Never be liable, ऐसा कभी नहीं हो सकता है. Involve experts, you cannot shift the responsibility on anybody else's shoulder. Stand of the company is correct. Approach of the auditor looks reasonable. Right? So what does it say? The approach of the auditor looks reasonable. The auditor found internal controls to be satisfactory and also did not find any circumstances to arouse suspicion and hence perform their procedures on the selected verification. Okay, then MN and Associates, the CA firm, has been appointed as auditor of the for 21-22. It consists of two partners. M is brother of the father of the finance director of the company. Brother of the father of the finance director of the company. N is an old friend of the finance director of the company. Right? So M is the brother of the father and N is an old friend of the finance director. What kind of ethical threat is associated with the appointment? Self-interest? There is no financial interest over there, right? No employment interest also. Advocacy threat? No. Are they promoting? No. Familiarity threat or the self-review threat? So no self-review, no maker-checker getting violated. So it is the familiarity threat, right? So it is the familiarity threat. Correct. Next one, Siddha Private Limited had turnover of 39 crore. The company has taken a loan of 39 crore from bank financial institution. These loans were paid by the company. The company is of the view that auditors reporting on IFC under 143(3)(I) would not be required. So if turnover is less than 50 crore and borrowings are less than 25 crore, but here the borrowings are not less than 25 crore, they are more than 25 crore, they are the 39 crore. Right, so the turnover of SIDA is below required threshold and hence IFC will not be applicable. Yes, the turnover is below the threshold, but the loan amount was fully paid before the year end, hence IFC will not be applicable. The turnover is below threshold, but loan required for the but the loan amount was above required threshold, irrespective of the fact whether the loan was outstanding or not, IFC would be applicable. So though the turnover is within 50 crore, the borrowings have exceeded the 25 lakh. Okay. Next one, which of the following is an example of a direct entity level control? So you have two types of ELCs, direct entity level controls and the indirect entity level controls, right? So direct entity level controls, which will help you to PDC, prevent or detect and correct a material misstatement. And indirect ELC, they will not help you to prevent or detect, but they will help in the effective application of the direct TLC. So which of the following is a direct TLC? Ethics policy? No, that's an indirect TLC. Human resource policy? Again, it's only a policy over there, right? Business performance review, job roles and responsibilities. So job roles and responsibilities is again, you're just defining the work. Right, so business performance review, that's a direct entity level control, which will help you to prevent, detect and correct. Okay. Advance Bank has sanctioned an overdraft of 42.5 crore to ASG on the working capital. As per the bank norm, the drawing power in the overdraft account needs to be reviewed on a quarterly basis as per the audited stock statement. As the central statutory auditor, while verifying the advances, you notice that the bank has not obtained the stock statement for 2 quarters, 21 and 22, and no provision for NPA has been made. What will be your decision as the central statutory auditor, right? So stock statements older than 3 months, the account shall be deemed as irregular. Right? Account statements, stock statements older than 3 months, the account will be deemed as the irregular. Okay. Right, and then you have a big case study being given over there, right? So it says the auditor checked the SLR requirement on 12 odd dates in a year, right? But what do we say? 12 odd dates not being Fridays. And you're in the month of July, right? In the month of August and in the month of the October, है ना? Friday, Friday, Friday. So in these months, the auditor has not done the checking on the correct day. And because it has to be done on 12 odd dates, not being the Fridays. Okay. Then after that, they talk about the computation of the demand and time liabilities. How much is the demand and time liability? 250 crore. It includes margin held for funded facilities. So that is to be excluded. So 250 minus 4. Right, then credit balance. So credit balance is again to be excluded. So minus 6. And adverse balance of the Nostro Mirror account. Right, so again the adverse balance is to be reduced. So 250 minus the 13. That gives you the 237 crore. And unadjusted deposit, right? So that deposit amount it did not be included, right? So that is to be kept separately. So it's an unadjusted deposit for the agency business. Okay, right. Then wife of CA Dharam was also a CA and was actively involved in the purchase and sale of shares. She purchased 500 shares of Sambhav Limited of 100 each for rupees 9 lakh. Or is, so what does it say? 500 shares for 500 each for 9 lakh. And 500 shares. All the required communication were made amongst the joint auditors and significant matters were discussed. Right. So list down all the months whose date has been selected inappropriately by Dharam for calculation of SLR. So that is July, August and the October. Right. Then what is the, while calculating SLR compliance, what will be the value of the demand and time liability? 237 crore. Then will CA Dharam be disqualified after his wife purchases 500 shares of 9 lakh rupees? Right. What does it say? Will not be disqualified as relative own shares of less than the face value of rupees 1 lakh. Right. So market value not relevant over here. Right. Then which of the following statement is true? Right. So they've given some consolidation adjustments over here. Right. While finalizing the account, some adjustments were made to give effect to the merger. These adjustments were related to determination of goodwill of 3 crore. So that is 300 lakh. Determination of amount of minority interest of 75 lakh, right? So 375 lakh of the permanent consolidation adjustment. And then intra-group company transactions of 22 lakh were also made. And another adjustment for harmonization of accounting policy of 45 lakh. So 22 plus 45, right? So that is coming to the 67, right? So permanent consolidation adjustments and the current period consolidation adjustments. So what are the permanent consolidation adjustment? 375 lakh and the current period consolidation adjustment of the 67 lakh. And in the given situation, whether the engagement letter issued, right? What is the issue with the engagement letter issued over there, right? The engagement letter does not specify regarding the, it mentions the objective and scope of the audit, it mentions the responsibilities of the auditor, the identification of the AFRF, and also the expected form and content of the report. But what is not there in the engagement letter is the responsibilities of the management. What is not there in the engagement letter is the responsibilities of the management. So engagement letter issue doesn't specify the responsibilities of the management. It should also specify the responsibilities of the management. Okay. And just I think 5 minutes I'll go overboard the time, but let us complete with this another MCQ over here. Right. So it talks about the advances being granted to Mr. Ram has been guaranteed by state government. So state government, so what we say? No, only central government guaranteed advances. So this is this to be treated as an NPA? Yes. And as the 20th April, the ad hoc limit of Mr. Sham has not been reviewed even though 120 days. Now it says 180 days. Limits not reviewed within 180 days are to be treated as an NPA. It has not been reviewed even though 120 days are over. So this need not be treated as an NPA. Okay, right. Then term loan has been granted of 20 crore, right? And then the facility will be used for repayment of unsecured loan of promoter 10 crore and towards development and construction expense other than land cost of the company's new office to be situated in Faridabad 10 crore. Right. So land purchased for new office 4 crore. No, what did they say? Other than land cost. So it has not been used for the purpose for which it is raised. And development and construction expense of how much? 10 crore. Here, how much is the development and construction expense of new office? 11 crore. So 1 crore is again excess. Then repayment of unsecured loan to promoter, that was anyways 10 crore. So here it is only 3 crore. So here it is being used. And investment in FD, so again it has not been used for the purpose for which it has been raised, right? So 4, 5, 6 and 7. So 7 crore has not been used for the purpose for which it has been raised. Okay. Then value of assets 700 crore. Value of liability 415 crore. So whether the company has maintained the solvency margin, excess of value of assets over the amount of liabilities, which shall not be less than 50% of the minimum paid up share capital. Right, so 200 crore, so 100 crore, right? So are they more solvent than is 700 minus 415? Is the value of assets more than the liabilities? Yes. And then after that, it says it enters into a reinsurance contract. Okay. Right. So under clause 9, utilization of the term loans, it talks about the 7 crore has not been utilized for the purpose for which it has been obtained. Then which of the accounts shall be classified as an NPA? Ram, Sham, both or neither. So only Ram, right? Because it is the state government guaranteed advances. Then based on the above data, whether Posh General Insurance has maintained the adequate solvency margin? Yes, the solvency margin has been maintained, therefore no action is required. Okay. Then Mr. Shri is acting as a surveyor and a loss assessor, right? So also acts as a surveyor and a loss assessor. He has not taken any permission of the institute for the same. So acting as a surveyor and loss assessor has been covered under the list of the general permission. So what does it say? No, as the general permission from the council has been granted for acting as the surveyor and the loss assessor under the Insurance Act. And identify the type of reinsurance contract. So the type of reinsurance contract which is entered over there is the facultative reinsurance, right? It is regarding the facultative reinsurance. Okay. Right, so we have not overboarded the time quite a lot. So we've just had a look at the entire MTP. Yes, and MTP May 23, the series 1 over there. And we've also seen SA 550 and then SA 610, 600, 620, and also had a discussion regarding clause 6 of part 1 of the first schedule. Okay, so, or am I dreaming, or what I thought it was already covered? Okay, so all that is being covered. Okay. Okay, discuss so how to present the answers effectively. So how to present the answers effectively, you should be writing concrete sentences in the exams or not vague points here and there. So for that, whatever answers you prepare, you need to prepare for them correctly. Okay, and you have to able to identify the questions very, very correctly. Okay. Yes. Okay. Right. So all good for today. So tomorrow we'll start with peer review. What do you say? Tomorrow, peer review, they change it 90 days to 60 days. Now, so they say 20 days में peer review करके finish. Now only 2 days, 1 day, 3 day given. Earlier, so much time was given. Now, on-site review to be completed within 6 days. If you're doing the peer review of a new unit, then again within 7 days it should be completed. You know, so many of the points over there regarding the peer review and NBFC ka, those layers, we'll see them again. Base layer, middle layer, upper layer, and the top layer. And so all that we will meet to discuss tomorrow. Thank you so much for your patient hearing and looking forward to see you all tomorrow. Bye bye. Have a wonderful evening.